Joining us in the studio today, JC Parets, President and Founder at allstarcharts.com. And it's great to actually have you here with us, JC.
Oh, it's my pleasure.
Right. So let's set the global context first. Then we'll come to India, which is very exciting, what you're seeing for India. But first, just put things into context for us. The US has been at these record highs, seems to be stealing the show all around. Where are we really headed from here?
Well, I think that globally and in the United States, we haven't gone anywhere for a long, long time. America was flat for 21 months after a tremendous 2016 and 2017, like record-breaking years. So a consolidation and digestion of those gains, I think, is perfectly normal. And consolidations tend to resolve in the direction of the underlying trend, which prior to those 21 months was up, of course. So the fact that we are now resolving higher, I think makes perfect sense. I think the Dow Jones Industrial Average sees 30,000. I think we get there at some point next year. And I think the fact that most people around the world think we've been in like this long 10-year bull market, we must be looking at different data, because when I look at Europe, Europe's done nothing for 20 years. London, FTSE 100, nothing for 20 years. Taiwan, nothing for 24 years. So, when people are like, well, JC, I think we're at the end of a long bull market, I think we're at the beginning of a new one.
That's just what we like to hear.
Yeah, absolutely. I was just going to cross-question him. Yeah. So does that mean those underperforming markets will begin performing, or these ones will also move forward? But yeah.
I think that when we talk about maybe the small cap stocks, we've seen underperformance out of the smaller cap names, not just in India, but in America. A big reason is because in America, financials have a much larger exposure in small caps than they do large caps, right? So if we start to get rotation into banks in America, and I think we do, I think we can head substantially higher. Same thing in Europe, right? What's been holding Europe down is that there are a bunch of banks, right? They don't have the technology that America has or that India has. So Europe's a bunch of banks. Of course they're struggling. They've done nothing for 20 years. So if we can start getting rotation into some of those bank stocks, I think they do well. And the beauty of it is that when I tell people that we need to be buying European banks, they think I'm crazy, right? So when people think I'm crazy, it's because I'm probably onto something. That's how I see it.
But just on the subject of US, there was this big fear about the US yield curve, and just about every global guru said, okay, US is headed in for a recession. Are those concerns arrested because the curve has now moved, and considering it's a chart, I'm guessing you must be tracking as well?
Of course. The way I see it is the fact that the consensus is that we're going into a recession, I think is part of the catalyst to take US stocks much higher. So not just like a little bit higher. I think we're just getting going, and we're in the infancy stages of what I think is a new bull market.
Okay, let's find out what your views are on India. Are you crazy with that one as well? Because you were saying that it's an animal of its own, where we're performing very well. Look at the levels that we see day after day. So what's the India story?
The India story is that, like America, we have exposure to technology in India and in America, which is why they're two of the best performing countries in the world, because of the fact that there's much more technology than natural resources. A lot of these countries around the world with more exposure to energy hasn't been doing very well. So Canada hasn't done anything for 12 years, right? So a lot of these emerging markets, typically like China, for example, they have a lot of that exposure, and India and America have a lot more technology. So that's where that bid continues to be. And we look at that as an advantage. And I don't think that's coming to an end. I think that continues to be the catalyst to send Nifty much higher, and US stocks, Dow Jones Industrial Average and stuff like that, much higher too.
And within the Nifty then, what are you looking at particularly? What's the kind of mix of things that you feel will help to take the markets higher?
So there's two schools of thought, right? They're like, well, JC, if you're right and stocks are going to do so well, then some of these underperforming areas should catch up and we should get rotation. Well, what should happen and what will happen are two different things. So for me, we have a saying in America, if it ain't broke, don't fix it, right? So for me, the things that are already working, like technology, like in India, Bank Nifty, right? The banks in India are doing much better than the banks in America. So, for me, it's really, instead of bottom fishing and, dumpster diving, as we call it, and looking for things that haven't been working and hoping that one day the market agrees with us, the market already agrees that technology is doing well. So why mess around? Here in India, things like TCS, in America, things like Microsoft or Apple, they're working. Chip stocks, they're working. So will we get rotation into energy? Maybe one day. Pharmaceuticals in India they just can't stop making new lows, right? So will we get rotation? Probably, but until we start to see evidence of that, I don't really see any reason to get cute, right? Stick with what's working, I think.
They've already started moving, by the way, pharmaceutical stocks. But anyway, so, what I'm trying to understand is the problem is that these stocks which have led the Nifty to 12K are just those handful of names. Two of the names that you mentioned, a TCS, the
Yes.
HDFC Twins, a Bajaj Finance. Very selective, even out of the Nifty 50 names have made the Nifty look like what it is today. What is, while I completely understand trend is your friend and, stick by what's actually made money for you, I completely get that. But when do you see a rotation actually come by in the dumpster names, in the mid and the small caps, because they've had a long time of underperformance?
That's right.
Not just non-performance.
Yeah, no, it's very clear you're paying attention. You're 100% right.
Yeah.
And what I think and you're talking about more of like a breadth conversation is sort of how we look at it. For me, the underperformance out of small caps and mid caps, to me, is more of an evidence of risk aversion rather than risk appetite. And as soon as small caps and mid caps started to underperform in India, when was that? It was January of 2018. And what happened in January of 2018? Stocks all over the world stopped going up, right? So for me, I think that not only are we going to get rotation into small caps and mid caps in India, I think when you start to see that, I think from a global standpoint, I think that's evidence of that risk appetite that we do see coming, and I do think that we get the rotation. And I think when we do, that'll be confirmation that yes, in fact, we are on the right track and we do need to be buying stocks very aggressively.
Sure. Will that rotation, though, come at a cost of large caps underperforming or stalling for a bit while money moves into mid and small caps? Or do you think it will be an across-the-board rally and all of them will rise up?
Well, when we get rotation, we often see outperformance out of the names that are rotating. So therefore, we're going to get underperformance from the names that are already working. I don't necessarily think that is a negative. I think, like you said, a rising tide lifts all boats. True. And I do think we get that, and I wouldn't look at that as a negative. I think they continue higher, but the ones that, the bigger they fall, the harder they bounce, right, as they say. So outperformance would be normal, I think.
Sure, and they're great compounding stories anyway.
Yeah.
But tell me about the 3-4 charts that are looking most interesting to you amongst Indian stocks.
Yup, AstraZeneca, we talked about pharma, right? But it doesn't look like pharma. It looks kind of like the bank stocks. It really is, we're seeing strength. So I think that we can look at that name specifically and notice the relative strength, right? So if pharma keeps making new lows, but AstraZeneca is breaking out to new highs.
It's done phenomenally well. It's been one of the best movers last year as well.
So that relative strength, from our perspective, is evidence of accumulation out from the institutions, right? Because think about it, pharma's just selling off, and AstraZeneca didn't get the memo that they're selling all of the pharmaceutical stocks. So for me, that relative strength is quite obvious, like you said, yeah.
Would that be MNCs as well? Some of the other MNC companies? And I noticed you have media as well on your radar. That's been buzzing off late.
Yeah, again, when did media stop doing well? At the beginning of 2018, when stocks around the world stopped going up. So I think the media, I believe, is part of that rotation that we talked about, that we could potentially see. I don't necessarily know that I can't pick out one media stock that is looking as the risk reward as favorable as something like an AstraZeneca. But yes.
What sort of a business? Was there so many? There's print, there's broadcast, multiplex, digital. What within that are you looking at closely?
We're looking at the overall complex, right, and the continued underperformance,
Yeah.
right. So I would group media in there, perhaps with the small caps and the mid caps, where if we start to see rotation into those areas, which, as you mentioned, we're starting to get a little bit, right, a little bit, but we need to see something more secular, and I think that's part of the rotation and evidence of risk appetite that we have yet to see. We see a little bit, but I think we need to see more evidence of that.
What else other than AstraZeneca and media names?
Well, I think we stay away from precious metals. You know, they've done so well over the last year, and over the last couple of months, we've wanted to sell it. I look at it, not that I think precious metals are going to get killed, I just don't see them going up anytime soon. So for me, staying away from precious metals is really just avoiding opportunity cost, right? It seems like a waste of money. I look at it like, where else can we allocate that capital?
So no Titan, no ancillaries as well?
No, not for me. We stay away from those areas, and I think we stick with what's working. I like Bank Nifty. I like HDFC. You know, those areas. And when you look at it, India has the most expensive banks in the world, right? When you look at all of the banking sectors all over the planet, the multiples in India are off the charts. And there's a good reason for that. Getting back to the earlier conversation, I would rather be in things that the market already agrees should be going higher instead of hoping that one day in the future the market agrees with us, right?
In terms of flows, JC, do you see more appetite for India building up? And especially given the current context with the trade wars, such and such, we've just about started to see foreign flows returning into the Indian markets. But comparatively, vis-a-vis some other markets, some of the other emerging markets?
I can't speak on behalf of the trade wars. That's above my pay grade. You know, I really, quite frankly, don't know what that has to do with the stock market. I get asked all the time. You know, yeah, right.
That's the best you can do.
Yeah, exactly. As far as other emerging markets, I just don't like the overwhelming exposure that the majority of emerging markets have to natural resources, right? It's just too much exposure. India has so much more exposure to technology, you know, and that is one of the big reasons, in my opinion, why America and India continue to stand out versus, say, something like Europe that hasn't done nothing for 20 years because they're a bunch of bank stocks.
And China, I just want to get your take on China.
Yeah, I mean, I said, if it ain't broke, don't fix it, right? So the things that are working are still working. You know what's not working? China's not working,
got it.
right?
Yeah.
So I look at China more like on an overall, and then you could talk about the ones that trade in America, like the ADRs that trade, and then you could talk about the Shanghai Composite. Either way, neither of them look very good, right? So I think that ultimately we do get that rotation into the other emerging markets and some of the areas with that natural resource exposure. Perhaps they might be pricing in more global growth, right? We have yet to see that. I do think we get the rotation, but we haven't seen it, number one. Number two, even if we do see some rotation, there is no evidence whatsoever that emerging markets will start to outperform, right? They might do well, but no evidence yet of outperformance. Quite the opposite. New lows relative to developed markets. So no evidence of outperformance there in emerging markets other than India.
So tell me, since you are so gung-ho about India having the exposure that it does to IT and being a hub, so to speak, in terms of a service provider, which is that one IT chart that looks most attractive to you, say, for the next 2 to 5 years?
Yeah.
And in the near term?
Just by TCS, right?
Besides TCS.
You know, if you can own the index and you can own a basket of the IT names, I think that's probably the way to do it. That's what we want. Any way that we can get exposure to those large cap technology names in America and India, I think money continues to flow in those areas. We see no evidence of that stopping whatsoever. Another 10-15% higher in Nifty IT, another 10-15% higher in Bank Nifty, in Nifty 50. I think the path of least resistance is not just a little bit higher, I think it's much higher. And the more I tell people that I think that we're at the beginning of a new bull market, they think I'm crazy. And I think that's the catalyst to take us much higher. The fact that investors are just not in. Investors don't have enough exposure to stocks. I think they're too scared. I think they keep thinking that we're going into a recession and yield curve inversions and trade wars, and it's just bad news, bad news, bad news. And if that is what you're going to make decisions by listening to that stuff, I think you're doomed to fail. I think we need to focus on what is actually taking place, not the rumor mill, but what's actually taking place. And what's actually taking place is that these charts are going from the lower left to the upper right. And we call those uptrends. And the one thing that we know for a fact is that markets trend. And that's why technical analysis works, because we look for trends. You know, what Newton, right? An object in motion tends to stay in motion.
Yeah.
Well, guess what? IT, Nifty, American stocks, they're in motion, they're moving higher. I don't think that stops.
So on the FANG names as well, since we're on it, and I know you like them, but not looking overvalued, not looking like they're topping out?
No, quite the opposite. You know, when you talk about the FANG names, you talk about Google, for example. Google's done nothing for almost 2 years, right? After a beautiful run. And now we're resolving higher and making new all-time highs. That's the G in FANG, right?
Yeah.
The one in FANG, Amazon, if I have any concerns, right? If you're like, well, JC, everything is so great. You know, where is the one area that maybe keeps you up at night? You know, consumer discretionary stocks in America, and Amazon, right, is a big. The fact that we've yet to break out. In fact, we're kind of rolling over. That's one area that maybe we pay a little bit more attention to. And if we don't start to get rotation into that consumer discretionary space, then maybe we need to raise our concerns a little bit. I'm getting a little bit ahead of myself, of course. But if there's anything that we want to watch from a downside standpoint, I think that's one. Number two, from a risk management, because the one thing we know is we don't know anything. We don't know what's going to happen next. I don't have a crystal ball, right? I don't know anything. So where am I wrong? Where's JC wrong? Well, if the U.S. stock market is back below the 2018 highs, maybe we need to reevaluate the thesis that we're entering a new bull market, right? That's how I would look at it. I think that's the lower probability outcome. I think we go substantially higher, but recognizing that we don't actually know, I think that's the risk management level. If we're above that, we're good. If we're below that, let's reevaluate.
All right. Okay. JC, thank you so much for joining us this morning, and have a great trip here in India.
Thank you.
Great.